If you're involved in the housing market, and I assume that most of you are if you're watching this video, you know full well that it is a numbers business. And all of us are surrounded by housing related data day in, day out, and it can become a little overwhelming at times, even for an economist like myself. Well, today I'd like to take a few minutes to talk about just a couple of the data sets that I think are particularly important for all of us to track, as well as to offer you my perspectives on them as well. Now, there can be no doubt that the ownership housing market really was a beacon of light as we moved through the pandemic period. Even though the market paused last spring as COVID-19 hit the nation, it snapped back remarkably quickly, unlike many other parts of the US economy that are still suffering today. And this is important, as housing is a significant contributor to the broader economy. For example, last year, spending on the construction of new homes, residential remodeling, and let's not forget real estate brokers' fees, that amounted to around $885 billion. That's roughly 4.2% of US gross domestic product. But the real number is actually far greater than that when you add in all the spending on all household services. The total amount of money spent on housing in aggregate in 2020 was around $3.7 trillion, or 17.5% of the country's economy. So we know that the housing market is a very important part of our economy, but can that number continue to grow, or at least maintain? Let's take a look. This first chart shows the number of single-family homes for sale going back to 1983. And as you can clearly see, there's never been a time, at least since records were kept at the national level, where there were fewer homes for sale at any one time. And this is a problem, because the biggest issue the market faces today is that demand for homes is far exceeding supply. A report that I track very carefully, and I'm sure that many of you do too, is the National Association of Realtors Pending Home Sales Index, which is shown here. Although it's not a perfect indicator, as the survey only covers about 20% of all homes in America that go pending, it does give us a pretty good idea as to what the future may hold, given that, all things being equal, about 80% of pending homes close within roughly 2 months, and that makes it a leading indicator. You can clearly see the massive pullback last spring because of the pandemic, but this was very quickly followed by a very significant surge. Now, it pulled back again last winter, but I would suggest that this is more a function of lack of homes for sale than anything else. But look at the March spike. Now, you might be thinking that this is a great number, but I would caution all of you not to pay too much attention to year-over-year changes, as they can be deceiving, specifically right now. And I say that because, you see, the index jumped because it was being compared with last March, when the pandemic really kicked into gear. And when we look at closed sales activity, well, it actually lines up pretty well with the pending home sales index, which fell in January and February, and this is reflected in the contraction in closed sales that we saw earlier this spring. Now, if the index is accurate, it suggests that we may well see closed sales activity pick up again over the next couple of months. Of course, any time where housing demand exceeds supply, there is a solution, and that would be building more homes. But as you can see here, although more homes started to be built as we emerged from the financial crisis, the number today, it's essentially the same as it was 2 decades ago. And it's been declining for the past 2 years. And that is significant. Why? Because the country has added over 12 million new households during that same period. And that has further fueled demand for housing. And well, if there are no new homes to buy, well, it does one thing, and it puts more focus on the resale market, and that has already led to very significant price increases, and these could continue unless we start building more homes. But this particular report, it offers some additional data sets which I think give more clarity to the state of the new home market. Before the housing market crashed, you can see that a majority of new homes that were on the market for sale were being built at that time. But as the housing bubble was bursting, the market dropped and the share of homes that were finished and still for sale naturally rose. But what I want you to look at is not that. Look to the far right of this chart. Now you see the spike in the share of homes for sale that have not yet been started? Well, given the massive increase in construction costs, builders have, understandably, become far more cautious. Now they're trying to sell more homes before they start to build them in order to mitigate some of the risk. But it also tells me that they see demand that is not being met by the existing home market and are looking to take advantage of this. And when we look at new home sales, well, you can see that the trend in essence follows the number of homes for sale. But I would caution you on a couple of things. Firstly, these figures do not represent closed sales. As the Census Bureau, who prepares this particular data set, they consider a home sold once it has gone under contract. And this makes total sense, as a home can be sold before it's even broken ground. In essence, it's more similar to NAR's pending home sales index than anything else. Looking now at sales by stage of construction, you see here that as the pandemic was getting started, new homes that were ready to move into were what buyers wanted. They wanted to move straight away. And that accounted for over 42% of total new sales in April. Now, as the supply of finished homes dropped, homes that were being built took the lion's share of sales, as they have done historically. But look at this April. The greatest share of sales, 37.7%, were homes that hadn't yet been started. Again, this supports the theory that builders remain cautious, given those ever-escalating costs we've talked about. But it also shows that buyers' needs are not being met by the resale market, so they were willing to wait, likely a considerable time, for their new home to be built. Of course, the couple of data sets I've shared with you today are just the tip of the iceberg when it comes to housing-related data that all of you should be tracking. Why? Well, they can tell a story that impacts everyone involved in the development or the sale of houses. In addition to the data we've discussed today, you should also be very well versed in mortgage rate trends, demographic shifts, building permit activity, as well as the economy in general. And you need to understand all these numbers at a local as well as national level. For a vast majority of home buyers, well, buying a home will be the most expensive thing they will ever purchase in their lives. And given memories of the housing crash, as well as a significant increase in home prices that we've seen since last summer, it's now more important than ever for you to be able to share your knowledge with your clients and be able to advise them accordingly. Well, I do hope that you found my comments of interest, and if you have, then I welcome you to the wonderful world that is real estate economics. I'm Windermere's Chief Economist, Matthew Gardner, wishing you a safe, happy and successful 2021. Bye now.